Market is majority bullish, 13-1. Pretty wild ride yesterday. The demand block is still holding up right here at 63.80, 63.78, right around that number. Those bottoming locations here held up right there. So that's a good proof to us. Demand is still there. That's a demand block, meaning that's a location where buyers are gearing up to add in or buy. At least that's what we want to see. If that's the case, at least as of yesterday, that was the scenario. Our all-time high is still connected to that fib location, and still have a majority bullish on the weekly time frame as well. 14-0, pretty wide expansion. We know that's our scenario. We know that we're softening a little bit here towards the upper end of the trend, but there is a little bit of demand. So that's going to be a pretty significant zone now to keep an eye on, that 63.70 range on SP 500 to see if we retest that, if it holds up. If it doesn't hold up, then it's probably going to be a quick trip back down to 61.23, which is the 236. So this is going to be a nice frame of reference for us. We saw really a cratering yesterday on the 50-day moving average. The breadth, the market, the number of stocks above the 50-day moving average dropped down to 57 yesterday. It also notched us back down to majority bearish. I've mentioned this before. When you have tight compression like this and you get a big whippy day like this, it can pull all of those one direction or the other. It's a decision point right now. So once we have, the decision made, it'll start to fan out. It'll start to open up versus this. This is a decision point. This is a decision point. So you get these extremes. Obviously, the upper end of the range is as well. But we want to see now if we do get any follow through back to the upside, or if any rallied back to the upside is just going to be counter trend. VIX also pulling back a little bit here. You saw that. A spike, and then with that rally that we saw in S&Ps, see if that's in there here. Now I can just squeeze into that. I might as well. That bottoming tail bar right there, the opposite happening on VIX. Okay, so VIX, so that's a bullish sign here to see VIX pulling back. Although we're getting some elevation, we know that everybody's kind of trigger happy, kind of punchy right here at this upper range. Who's going to say what, and what's going to turn the market, and is it going to roll over at that? It feels like there's some pent up anxiety now starting to happen at these levels, and that feeling is coming from this market data. Okay, we're watching to see what's happening here, and that's kind of the scenario that we know that we're going to run into that at the upper end of the range right here. So if if it starts to spook you a little bit and say, I just am not comfortable with the risk that I'm taking, then again, as far as allocation, what percentage do I have in equities? What percentage do I have in cash? What percentage do I have in XYZ? Okay, those are the decisions that I'm talking about in terms of market allocation and market direction and market structure. Is what direction should I be aiming towards, and what is the higher probability? Is there a higher probability that 100% of my money is going to go higher if I'm in the S&P 500 right here? Not without a retracement, or not without what we're dealing with right now. This is what these topping patterns start to feel like. Is it starts to become a little bit more of a tug of war, and it gets kind of choppy, and that's playing out for us right here as we look at some of these scenarios. Let's move along here. We've got S&P 500 that closed out. That did close out yesterday at 12-2. It's not including that pre-market data today, which is pushing that number back up a little bit. Dow Jones Industrial Average also holding that demand block right here. Okay, if I were to zoom in fact, let me do that. It's going to notch the fib tool down to there, which is okay, but you can see that demand block inside of this placement here and here, so it's also doing its job. Okay, bullish, majority bullish, fanning out, breakout locations being retested, demand is coming back in, or at least for the day. Okay, there may be additional supply that happens up here, supply meaning sellers, but in this case, as of right now, that's a nice confirmation of the S&P also. Triple Qs on the other hand, that's gapping a little bit higher. It did get down into the demand block a little bit deeper. Obviously, tech names are going to be a little bit more volatile, but it's also holding up and gapping higher this morning. It could be an island reversal. An island reversal is when you have a gap lower and then a gap higher and leaves that poor little guy that just down there on the island. Okay, so that's a bullish pattern which could hold up as well, especially if we get some follow through on that on triple Qs. The Russell 2000 well into the supply block here. It is really been the laggard, but working pretty nicely this last couple of weeks and months as we're fanning out on the Russell 2000. Oil, let's take a look at that. We talked about that yesterday, where it's gaining some momentum here out of compression. That's an ideal location, is out of compression. This becomes a decision point here, and we've now held up this 382. Remember, these are kind of rungs in the ladder of supply demand. So once you break out of one, then it's that, think of it's a tug of war. Think of the guys doing a tug of war, pull back and forth and back and forth. That's really all the market is, between buyers and sellers, supply and demand. Demand is winning out right here, and at this line, now it's pushing up towards this 78. That's going to be an area of resistance, an area of supply, because sellers had sold here and a lot of sellers had happened here. We're going to run into that, and we'll see which one takes over. But gaining some momentum now in oil. Gold is also the story. Yeah, here we go. Yep, say this is now another breakout. So we've finally broken out of this high, continuing that move higher. We'll see if we get some acceleration. Breakouts create additional demand because you get buy orders that are at the top of the range. You also get FOMO buyers that are saying, oh damn, here we go, I missed the boat, I better jump in now. Or I was waiting to buy, and professionals are not asking those questions. They're lined up, and that's why it's moving up. They have buy orders set up right here. When it hits that level, those buy orders are going to trigger, and away it goes. So we're seeing that this is getting really frothy on the weekly time frame for gold. Nonetheless, there is demand there for whatever reason. That's also in the back of your mind. The conspiracy theory and theorists in us all is like, why in the world is gold doing what it's doing? And then you listen to Ray Dalio and talk about this shifting of power and the fact that the dollar is cratering, and that's moving things out of U.S. Strength, just some interesting things. Nonetheless, that we don't have to know why, we just want to know that it is, and how to be able to participate in some of those market activities. Let's take a look at rates. We're seeing the 2-year moving through 365. Still really not a whole lot happening there. Majority bearish. Did get a little bit of a spike yesterday, but kind of also faded back down towards the end of the day. Majority bearish on the 10-year. This was 7 and 7. It's now moved back to 8 and 6. So a little bit more bullish with yesterday's market activity on rates. A couple of stock ideas to consider today. UPB, a nice confirmation bar, big volume. We're actually taking a trade on that one today. OLMA, also nice confirmation bar here as well. You're seeing biotech, pharmaceuticals, some interesting names, interesting sectors inside of that group today. This is the new buys all list. The tighter list here, there's 16, but you're seeing the pharmaceuticals, biotech names. So you're seeing a little bit of strength in that sector as well. If you would like to be able to get these, get your trading platform and trading view, the screener all set up and the settings, and learn a little bit more about the methodology, there are links in the description to get you access to the Momentum Edge trading course, the trend cycle methodology, which is our daily trade setup as we're going through and setting up trades and following them and managing them. You can follow along with that process, as well as instead of just getting, typically what we'll do is we'll go through one of these ideas, but we'll actually trade it, and then we'll put in the buy order, the stop order. Many of you that watch these videos already know this, but if you're new to this channel and want to kind of get the full experience, then the link below gives you the Discord channel, and we do a lot in Discord, and Substack is really the delivery mechanism that we're utilizing currently. That'll do it for today's update. Everyone have a fantastic day today.